Welcome to the tutorial on advanced accounting. Today the topic is amalgamation. What is amalgamation? Amalgamation is the process of mixing two or more entities into one entity. Whenever there is a process of combining or uniting multiple entities into one entity, then that type of process is known as amalgamation. Under this amalgamation, the assets and the liabilities are brought under common control in a single entity. Sometimes the shareholders of the transferor company, the company which will be liquidated, is known as the transferor company. So the shareholders of the transferor company are allotted shares in the transferee company. The substance of amalgamation is that the business of the transferor and the transferee companies continue to be run as before, though under a single corporate name. Amalgamation is a process of combining or mixing two or more entities into one entity. Types of amalgamation. Amalgamation can occur in various forms. Here we can see there are two forms of amalgamation. One is merger, another one is acquisition. In case of merger, both the company are dissolved and a new company is created. From the diagram we can see, suppose A Limited and B Limited, these two will be dissolved or liquidated and another new company C Limited will be created. In this scenario, it is called merger. On the other hand, acquisition is another kind of amalgamation. It means one company will survive and another company will liquidate. That means another company will be dissolved and the company which will be dissolved is called the acquired company. The company which will continue is called the acquiring company. From the diagram we can see A Limited and B Limited. If A Limited acquired the B Limited company, then it is called acquisition. Here we can see two types of amalgamation, merger and acquisition. Under merger, a new company is created and the old two company will be dissolved or liquidated, and under the acquisition, one company will be liquidated and another company will continue. Here the B company will be acquired by the A Limited, that's why this is called acquisition. Here we can see another form of amalgamation, that is called absorption. Absorption means when an existing company is purchased by another existing company. Here you can see, suppose A Limited is a company, B Limited is another company. If A Limited is liquidated, B Limited absorbed the A Limited by taking over, then this is called absorption. Sometimes big companies absorb small companies. In that case, pooling of interest is not applied. One company will absorb the another company. That's why the name is absorption. Sometimes external reconstruction is also considered as amalgamation. There is a similarity in this external reconstruction. The old company is liquidated and a new company is formed. And since we have discussed the reconstruction, there is another form of reconstruction that is called internal reconstruction. Although this internal reconstruction is not related to amalgamation, however, there will be another chapter on internal reconstruction. Internal reconstruction means whenever a company faces consistent financial pressure as well as there is a huge loss, in that case the company may reduce the share capital and the liability. That is called internal reconstruction. Although this is not our discussion topic, our topic is amalgamation. So external reconstruction sometimes can be considered as amalgamation because here the old company is liquidated and a new company is formed. Types of merger. Already we are aware that merger is a form of amalgamation, and there are three types of merger: horizontal merger, vertical merger, and conglomerate merger. Horizontal merger means when two companies produce similar product, and if they merge together, then the merging process is called a horizontal merger because they produce the similar product in the same industry. As for example, we can say if there is a merger between the Coca-Cola and Pepsi, that would be considered as horizontal merger because they produce same product in the same industry. On the other hand, vertical merger means whenever two companies which produce product in different stages in a product line, then that type of merger is called vertical merger. As for example, we can say if there is a merger between handbag company and a leather company, they are the producer of different stages in the industry, handbag, leather. If there is a merger between different stages in the production line between the companies, then that type of merger is called vertical merger. And the last one is conglomerate merger. Here two companies from different industries merge together. As for example, we can say the merger between Walt Disney and the American Broadcasting Company could be considered as conglomerate merger because Walt Disney is a movie maker and American Broadcasting is a broadcasting company, so different industry. That type of merger is called conglomerate merger. What is the purpose of amalgamation? The purpose of amalgamation is to get the synergy benefit. Synergy means whenever there is a effect of 2 plus 2 equal to 5, that type of effect is called synergy effect. Synergy is a situation where two companies can achieve more in combination than in their individual part. Here we can see if A limited and B limited merge together, and if the value of A limited is 2 and if the value of V limited is 2, and if they merge together and the value of new company, suppose the new company is AV limited, if the value of AV limited is 5, then that would be a result of synergy benefit. Through amalgamation, the new company can get the synergy benefit. If we show the specific purpose of amalgamation, we can see through the amalgamation, new company can get benefit like economies of scale. That means by combining the production process, there will be a huge amount of production and there will be a lower cost of production. Another benefit of amalgamation could be financial economics. By combining two or more companies, there may be a tax advantage, higher debt capacity, and lower borrowing cost, less cost for flotation of share and debenture. So that type of benefit can be achieved through amalgamation. And in the third benefit, we can see newly formed company through amalgamation can get the benefit of managerial effectiveness, which means there will be a get together of superior management talent, so there will be a management effectiveness. And we can see diversification. This diversification could also be considered as a benefit or purpose of amalgamation because through the amalgamation, two or more companies can get diversified product or diversified production process. So these are the benefit or purpose of amalgamation. So there are some terminology used in amalgamation. We can see transfer of company. Transfer of company is the company which will be liquidated or which will be dissolved or vanished. And transferee company is the company which will continue or which will acquire the another company. And fair value means the asset's sale price agreed upon by a willing buyer and seller. So whenever there is a question of amalgamation, we may need to calculate the purchase consideration. In that case, that fair value is a issue. And reserve. Reserve means the portion of earnings or surplus appropriated or kept by the management for general or a specific purpose. What are the types of amalgamation? There are two types of amalgamation. Amalgamation in the nature of merger, amalgamation in the nature of purchase. We can see amalgamation in the nature of merger. There are 5 conditions which should be filled up to be an amalgamation in the nature of merger. The 5 conditions are, the first one is, all the assets and liabilities of the transferor company became the assets and liabilities for the transferee company. That means the transferor company's asset and liabilities would be considered as the assets and liabilities of the transferee company. Transferee company is the company which will continue, and transferor company means which will be liquidated or vanished. And the second condition is shareholders holding not less than 90% of the face value of the equity shares of transferor company become the equity shareholders of the transferee company. And the third condition is the consideration. The consideration means anything which would be exchanged due to the amalgamation process. So the consideration for the amalgamation receivable by those equity shareholders of the transferor company who agreed to become equity shareholders of the transferee company is discharged by the transferee company wholly by the issue of equity shares or by paying cash for the fractional shares. Fourth condition is the business of the transferor company is intended to be carried on after the amalgamation by the transferee company. That means the transferor company will be controlled by the transferee company. And number 5th condition is no adjustment is intended to be made to the book values of the assets and liabilities of the transferor company by the transferee company. That means the transferee company cannot change the book value of the assets and liabilities of transferor company, but there is an exception. Whenever there is a necessity to maintain the uniformity for accounting policies, in that case you can change, but generally no adjustment could be made for the book values of the assets and liabilities of transferor company. Amalgamation in the nature of purchase. So we have learned 5 conditions which will be considered as the terms to be a amalgamation in the nature of merger. But if any amalgamation that does not fulfill the one or more of the previous 5 conditions, that amalgamation would be considered as amalgamation in the nature of purchase. Methods of accounting for amalgamation. Although in this tutorial we are not going to journalize the amalgamation process, so whenever we will journalize the amalgamation process, that would be considered as the method of accounting for amalgamation. However, we are discussing the basic issue. There are 2 types of methods for the accounting of amalgamation. First one is the pooling of interest method. In this method, the assets, liabilities and reserves of the transferor company are recorded at their existing carrying amounts. Second method, purchase method. The transferee company accounts for the amalgamation either by incorporating the assets and liabilities in the existing carrying amount or by allocating the consideration, I mean the purchase consideration, to individual identifiable assets and liabilities of the transferor company on the basis of their fair values. Whenever we will learn about the journalizing process in the next tutorial, we will get clear idea about these 2 methods. Calculation of purchase consideration. Before journalizing or before making the accounting procedure for the amalgamation, we must calculate the purchase consideration. Purchase consideration is the aggregate of the shares and other securities issued and the payment made in the form of cash or other assets by the transferee company to the shareholders of the transferor company. That means any issuance of share or other securities or any payment of cash against the shares of the transferor company that are considered as purchase consideration. While we are calculating the purchase consideration, we should keep in our mind that only the payment to the shareholders should be considered while calculating the purchase consideration. That means any payment to the debenture holders or any payment for the liquidation expense or payment for cost of absorption will not be included in calculating the purchase consideration. I mean any payment to the shareholders, any issuance to the shareholders, only to issuance to the shareholders or payment to the shareholders should be included in the calculation of purchase consideration. Now we are going to see how to calculate the purchase consideration from a practical problem. Suppose here we can see two company, X Limited and Y Company Limited. These two company will be liquidated or dissolved by a new company which would be Z Company. Z Company is a newly created company and X Company and Y Company will be liquidated. Here we can see there is a financial position of X Company Limited. These are the data of X Company Limited and these are the data of Y Company Limited. Here we can see the liabilities and equities, and here we can see the assets. Whenever we are calculating the purchase consideration, we will just focus on the items of equities. Payment to the equity holders would be considered in calculating the purchase consideration. However, we can see here share capital 10,000 shares, per share 30. The total amount is 3 lakh. And here we can see for the Y company 10,000 shares, 15 each. Amount of equity capital of Y company is 1,50,000. And we can see general reserve. So these are the another issue. However, now what are the conditions to amalgamate these two company, X company and Y company? Again I am reminding, in this amalgamation process a new company will be created, that is called Z company, and these two company will be liquidated. What is the condition? We can see holders of each share of 30 each in the company. That means the face value of per share of X company is 30. For the value of 30 of each share, the X company would receive 6 equity shares of taka 5 each. So for each share 6 equity share will be issued, and the price of each share will be taka 5, and there will also be a cash payment. On the other hand, Y company, the par value of Y company share is taka 15. For each share, the shareholder will receive 12% preference share, taka 10 each, fully paid up. They will also get taka 10 as cash for each share. And we can see there is a liquidation expense of two companies. The liquidation expense for X company is 2000 and the liquidation expense for the Y company is 1000. We already know that whenever we are calculating the purchase consideration, we should not include the liquidation expense. Again I am reminding, just we will consider the payment to the equity shareholders. So let's see the solution. Here we can see, according to the condition, each shareholder will receive 6 equity share, and we know that from the problem the number of share of X company is 10,000. Although the total amount of capital is 3 lakh, because per share is 30, actually the number of share is 10,000. From the condition we can see each shareholder will receive 6 equity share. So with this 10,000 share we will multiply the 6, because against 1 share they will get 6 equity share, and the price of the share would be taka 5. So if we multiply this amount we will get 3 lakh. Okay, so there is another condition, they will also get taka 5 in cash. Holder of each equity share will get taka 5 in cash. So 10,000 share and cash taka 5 for each share, and the amount would be 50,000. This is the 3 lakh, which is the amount of equity shares and the cash payment. So ultimately the purchase consideration is 3,50,000 for X company limited. And again here we can see Y company limited. The condition is, although the par value of share is 15, from the question we can see these are the number of share of Y limited, par value 15. However, they will get 12% preference share, one preference share, and this 12% is not applicable, or you should not be concerned about this 12%, because this will be applied for the dividend purpose. However, the main focus should be on the number of share, 1 preference share. Okay, they will get 1 preference share against each share, and the face value would be taka 10, and they will also get taka 10 as a cash. If we show this amount 1 preference share, so you can see holder of each equity share will get 1 preference share of taka 10 each. Number of share of Y company limited is 10,000, so 10,000 share, and they will get 1 share. So we shouldn't multiply 1 because the result will be same. That's why we have not shown the multiplication by 1. However, the each share price will be taka 10. So ultimately the amount of equity share which would be provided to the shareholder of Y company would be taka 1 lakh, and we can see they will also pay taka 10 as cash, 10,000 shares, and cash taka 10. So they will also get 1 lakh cash. So ultimately the purchase consideration for the Y company limited would be 2 lakh. This 3,50,000, this is the purchase consideration for the X company limited. I mean the shareholder of X company will get 3,50,000. Shareholder of Y company limited will get the purchase consideration up to taka 2 lakh, and these two company will be liquidated and Z company will continue. So before continuing, the Z company should provide the benefit of 3,50,000 to the X company, X company's shareholder, and 2 lakh purchase consideration should be provided to the shareholder of Y companies limited. However, in this math there is a mention of liquidation expense, but we have not shown it because in calculating the purchase consideration we don't show the liquidation expense, or we don't show any payment to the debenture holder. However, there is a note, any liquidation expense should not be shown or should not be included in the calculation of purchase consideration. If we consider another problem, here we can see problem 2. Here two companies, Star Limited and another company is Moon Limited. Star Limited and Moon Limited will be liquidated and a new company will be created, that is called Sun Limited. Sun Limited will be a new company and Star and Moon will be liquidated or dissolved. So these are the particulars. You can ask a question, why am I showing lots of information? However, all this information will be required whenever we will journalize this amalgamation process. But in this tutorial, just we are going to show the calculation of purchase consideration. That's why we will just consider the items of the equities. Let's see the condition. Here we can see the first condition for this amalgamation process. I am repeating, Sun Limited, it's a new company will be created by dissolving or amalgamating Star and Moon. The conditions are Sun Limited will issue 10% debentures of taka 1000 each to debenture holder. However, this is a condition, but we should not be concerned about this condition, because whenever we are calculating purchase consideration, we should not include any item from the debenture holder, so we should skip it. The second condition is the debenture holders of Moon Company. Here the debenture holder of Star Company and here the Moon Company. The debenture holder of Moon Company insisted that they should be allotted equity shares in Sun Limited. Accordingly, they were allotted 9000 equity shares. However, we will not consider this condition because these are the payment against the debenture holders. But again I am repeating, whenever we are calculating purchase consideration, we don't consider the payment to the debenture holders. These two items will not be considered while calculating the purchase consideration. Okay, the third condition is preference shareholder of Star Limited insisted for allotment of 900 redeemable preference share. And I am not mentioning 11% because you will be confused, because whenever preference share there will be a dividend issue. In that case this 11% will be used. However, the main focus should be on 900 redeemable preference share and the price would be taka 100 each. This should be considered while calculating the purchase consideration. This purchase consideration for Star Limited. On the other hand, the equity shareholders of Star Limited are to be allotted taka 10 equity shares at par for 7 equity shares held by them. The shares of Sun Limited are taka 10 each. That means Star Company Limited, we know already, we are aware that this company will be liquidated. They will get 10 equity share for 7 equity share. If they have 7 equity share, they will get 10 equity share. The ratio is 7:10 and the price would be taka 10 each. On the other hand, Moon Limited, they will get 6 equity share for 5 equity share. That means if any shareholder has 5 equity share, they will get 6 equity share in the Moon Limited. And here we can see, if any shareholder has 7 equity share, they will get 10 equity share. So here the ratio is 7:10 and here the ratio is 5:6. And they will also get cash 2 taka per share and Star Limited 10 taka per share. So let's see the purchase calculation. So these are the information. Equity share, we may need to consider this amount because we need the number of shares. We can see the amount of equity share is 2,10,000, and to get the number of share we should divide this amount with this par value. And if we want to know the number of shares of Moon Limited, then we need to divide the total equity share by the par value share. So let's see the calculation. Here we can see the solution. From the problem we can see, we have already said that these two items would not be considered in calculating purchase consideration because these two items are the payments against the debenture holders. From third, we will consider the preference shareholder will get 900 preference share, redeemable preference share, and the price would be taka 100 each. 900 share and taka 100 each. We are not considering this 11% because this is the issue of dividend, but we are not paying dividend. We are just calculating what is the payment. 900 preference share and the price taka 100 each. Amount is 90,000. If we multiply 900 by 100, 90,000. And here we can see the Star Limited shareholders, they will get 10 share against 7 share. So before calculating this number of share, we must know the number of share from here. So that's why we need to divide this 2,10,000 by taka 10 to get the number of share. 2,10,000, this is the total amount, and taka 10, this is the par value. The previous number of share is 21,000. So against this 21,000 share, they will get 10 share against 7 share. So to get the allotted share, we should divide this 21,000 by 7, multiply the result with 10. Again I am repeating, 21,000 is the number of share in the old Star company, and in a new company they will get 10 share against 7 share. So to calculate the allotted share, we should divide this 21,000 by 7, then the result should be multiplied by 10. So ultimate result is 30,000. That means the equity shareholders of Star Limited will get 30,000 share. And what would be the price? From the question we can see the price of each share will be taka 10. So 30,000 share, 10 taka price per share. The value of the allotted share would be 3 lakh. For the shareholders of Star Limited, the amount of purchase consideration would be 90,000 plus 3 lakh, 90,000. On the other hand, we can see these are the information for Moon Limited. They will get 6 share against 5 share, and they will also get taka 2 per share cash. So before calculating the number of share, we should know the previous old share. We can see the amount equity share value is 1,50,000, and if we divide this 1,50,000 by 10, we will get the number of old share. So we can see here the number of share 1,50,000. This is the total capital or equity amount, and if we divide by taka 10, then we will get the number of old share is 15,000. And from the question we can see they will get 6 share against 5 equity share. These are the information of Moon Limited. 1,50,000, this is the total amount, and this is the number of shares in old company. And in the new company, that company, the Moon Limited shareholder will get this amount of share. How can we calculate it? We can see this 15,000 share should be divided by 5. The result would be multiplied by 6, because they will get 6 share against 5 share. So ultimately the new allotted share is 18,000. Price of each share is taka 10, because we already know that this is the par value of share. 18,000 new share and par value share is 10, so 1,80,000. And again we can see there is a cash payment 2 per share. Cash payment will be made on the basis of previous share, where the amount of previous share is 15,000, and they will get taka 2 as a cash payment. These are the payment for the share, and this is the payment as a cash. So 15,000 share, old share. Again I am repeating, cash payment should be based on the old share. So 15,000 share and taka 2 cash payment, so 30,000. Here we can see the issuance of share. The value would be 1,80,000, and the issue of cash 30,000. So total purchase consideration for the Moon company would be 2,10,000. So this 2,10,000 and here 3,90,000, these two amounts should be paid by the Sun company. This is the newly formed company. Star and Moon will be liquidated and Sun will be formed. So whenever forming Sun Limited, this Star and Moon will be liquidated by considering the purchase consideration as 3,90,000 for Star and 2,10,000 for Moon Company Limited. Again I am repeating, any payment to the debenture holders would not be considered while calculating the purchase consideration. Thank you.